There are more than 44,000 banks across the world managing hundreds of trillions of dollars. Yet most people have no idea how the banking system actually works. And the truth is, if you don't understand banks, you don't fully understand how the modern world works. This is the banking system explained simply.
Banks didn't start with credit cards or mobile apps. People needed safe places to store valuable things: grain, metals, goods. Some clever people said, "Leave your valuables with me. I'll keep them safe."
Later, when gold became money, people stopped carrying heavy, dangerous bags of gold. They deposited gold and received paper receipts. Those receipts were trusted. They were portable. And eventually, people realized something important.
They didn't need the gold anymore. They could just trade the paper.
That's how paper money was born.
Banks noticed something interesting. People weren't coming back for their gold very often. So banks started lending out a portion of it. Until 1971, when the US officially dropped the gold standard. From that moment on, money wasn't backed by gold. It became fiat money. Money backed by trust.
And that completely transformed banking. When we say banks, we don't mean just one thing.
Retail banks, your everyday bank accounts. Commercial banks, loans for businesses. Investment banks, mergers, acquisitions, stock markets. Central banks, the system managers above all banks.
Different roles, same foundation. Here's the part most people don't understand. When you deposit money, the bank does not store all of it. They keep only a small percentage in reserve. The rest is lent out. Your balance is just a number in a database. And this works because not everyone withdraws money at the same time. Now here's the magic.
You deposit $1,000. The bank lends $900. Then $810 is lent out. Again and again, your $1,000 can create $10,000 worth of economic activity.
That's how banks grow economies. Banks connect two groups, people with unused money and people who can use money productively. Without banks, money would sit as that's with money builds businesses, creates jobs, funds research, and builds cities. This is why money isn't evil. It's one of the biggest drivers of progress. But the system isn't perfect. Banks fail mainly in two ways. A bank runs, too many people withdraw at once. To bad loans, too much risk, too little repayment. Because banks are interconnected, one failure can spread fast. That's what happened in 2008. This is why every country has a central bank.
Central banks act as lenders of last resort. Central banks regulate banks. Central banks control interest rates.
By raising rates, they slow the economy. By lowering rates, they speed it up. Their job is balance, growth without runaway inflation. So now you know, banks store trust, move money, grow economies, and shape the modern world. It all happens quietly in the background of your daily life. And when you really understand it, it's honestly impressive how far we've come. If this video helped you understand how the banking system works, hit the like button and subscribe for more deep, simple explanations. Because knowledge isn't just power, it's leverage.